Hello, everyone. Welcome to our weekly Wednesday webinar. Stepping in for Eddie today to welcome you in to our presentation today on smart saving strategies. I'm just waiting to see that everyone's coming in here. Um, with our weekly Wednesday webinars, we have them every week, Wednesdays at 6 p.m. We have a commitment to you every week. Andrea, can you say what that commitment is for us?
Yep. We're going to answer each and every single one of your questions.
So don't forget to drop them in the chat or use that Q&A option if you want to stay anonymous. Andre and I will monitor that chat and make sure that we get all of those answered for you before the end of the night.
Hi, Gretchen.
So welcome everyone. Hi, Gretchen. We see some familiar faces here. Very happy to see you here. Hello again, Stan. Always great to see you every week. Sorry that I'm not as high energy as Eddie, but welcome everyone. We're very excited to share this presentation with you about smart saving strategies. All right. And so just don't forget, you can always drop your questions in the chat or use that Q&A option if you want to stay anonymous. Andre and I will make sure to answer each and every one of your questions before the end of the night. Oh, we have few more people in here. And Milton, would you like to do the introductions for the presentation?
Absolutely. Thank you so much, Eli. And again, by the way, you did an amazing job. So I know Eddie will be very proud of you. And for those wondering, Eddie he's still on vacation. He's actually coming back tomorrow, if I'm not mistaken. So that means next week he will be back. And you will see him and everything, that all the energy that he brings. But again, Eli, you made him proud. So with that being said, everyone, good evening. Thank you all. Thank you all so much again for joining us on another weekly Wednesday webinar. Smart saving strategies for you all today. This is going to be a fun. We want to make it as interactive as possible. So as you heard from Eli and Andrea, we'd love to see your questions, your comments, any advice or the strategies that you use yourself, please, drop them in the chat. And as always, the commitment that we have, if you have any questions, we will make sure we answer them before we go tonight. So I'm gonna get going with the introductions because I do know we have a lot of slides to go through. And you already heard his voice, Mr. Eli from the marketing department. He is going to be keeping track of the chat and the questions that you have. Please submit them. Also from the marketing department, we have Andrea Londono, who is a very familiar face. So we encourage you all to please make sure you take advantage of the feature. And the main presenter for tonight, we have our very own Jarnika Trent from the membership development team, who is going to be leading the presentation. So Jarnika, take it away.
Yes. Hello, everyone, and welcome to Smart Saving Strategies. I am going to be your amazing presenter today. So I'm going to come off camera because there's a lot to cover. So use the chat, you guys. This is going to be very interactive. I'm going to ask a few questions of you guys. It's going to be quick snippets. So make sure that you participate and let's have a good time tonight, okay? All right, let's get to it. So let me pull my screen up. All right. So today's agenda, we are going to discuss the different types of savings accounts that we have to offer for you guys. It's going to be a little bit about different types of savings. So you're going to see different options that are available to you guys, as well as some amazing ways on how you can save and successfully save and come up with a plan and an agenda to work towards your savings goals. So let's get to it. See here. So we're going to talk about the different types of savings that we have. There's different ones that we do offer, like I stated before. So let's talk a little bit about traditional types of savings accounts versus different ones that we do offer. So as you guys can see here, we'll start with our traditional savings. It is the most common type of savings that we do offer. As most of you know, if you are currently a member of ours at the United States Senate Federal Credit Union, the traditional savings that we do offer is a requirement. So in order for you to be eligible to bank with us at the United States Senate Federal Credit Union, you do have to have a traditional savings with us. And this typically allows you to earn interest on the funds that you have here. You may be limited to how many withdrawals you can make. However, you can still utilize it as a savings, and it does give you a little bit of access to that if you have like a ATM card that you would like to use at an ATM machine. However, when it comes to physical swiping, this particular savings account does not allow for you to have a debit card. So that's something to be mindful of. So you can also access it with your online banking as well. And that's something that a lot of our members find useful. This is going to be one of the types of savings that we do offer. Let's see here. Oh, my computer. Sorry, my computer's not being my friend today. All right, so this is one of the most important savings accounts, again, that we do offer. This account is the foundation of the membership that you'll need here at the United States Senate Federal Credit Union. It is designed to be a safe and secure deposit option for your funds. Usually up to $250,000 is insured by the NCUA. That means that your money is protected in this savings account, and you're in good hands with us. For our existing members, you already know that it is a simpler account, and it is one that if you're considering joining us, it only takes $5 to join. And then with that, you also have a $1 membership fee, so it's about a total of $6. You earn also dividends on this particular savings account, which is really awesome. So your balance can grow over time with the competitive rates that we all offer while giving you access through your online and mobile banking. So just keep that in mind when it comes to this particular traditional savings account. All right, so the next account that you guys will see here is our club savings account. This account is also known as our holiday savings account. So I know that a lot of you have probably seen or heard of a holiday / vacation account, which allows you to set up funds for a specific location or a specific holiday season, I guess. In this terms, it would be maybe a Christmas option, or if you know that in August, which is a popular time to travel for most people, you can set up this account to put money away for a specific time frame. Then you can have the funds released to you at the end of that period. When it's the holiday season, usually folks have this account set up for them, usually later on down the year, so you can have it set up and have the funds released to you towards Thanksgiving time frame. So that way you can start some of your holiday savings spending. So I know for me in particular that I like to use these types of savings account because, you know, you don't want to go overboard during the holidays, but you want to make sure you stick to a cool budget. So this allows you to do that as well with the holiday savings account. So I think it's an awesome opportunity for you to take advantage of when it comes to holiday spending. All right, so at the United States Senate Federal Credit Union, as most of you know, these accounts are designed for members who plan ahead. So, you know, you set that money aside. It's gradually, like I explained to you guys before. You can make savings very simple. You can have it set up with an automatic transfer from your direct deposit or your existing account. So you don't have to really think about it. It's kind of like out of mind, out of sight. So if you don't see it there, you know that over time those funds are building up. And the best part is it helps you to avoid those last minute borrowing needs that you may need, usually required to use a credit card or some other options to supplement for your holiday spending. This way you can kind of know in advance what you're working with when it comes to shopping, because as you guys know, inflation is pretty high nowadays, and honestly, everything's a little bit more expensive than usual. So having something set aside for these particular options are very handy, especially during these stressful seasons. All right, so we have here next our youth savings accounts. If you are a member of ours, then you should already kind of know a lot about the youth savings. We actually did an amazing promotion where we offered $50 if you started your first youth savings account with us. So that was very popular. A lot of people did take advantage of that. Our youth savings allows you to be able to put money away for your child, whether it's going to be utilized for college or just an opportunity for them to understand a little bit more about money and better saving habits. Healthy money habits is definitely something that you can learn starting at any age. And usually with our particular accounts, the youth savings are designed to help kids and teens. So if you have a teenager who may be in high school looking for a debit card and just kind of need to get a quick start on how to save their funds, this would be a great opportunity for them to learn that. It's a great way to provide hands-on learning experience. I know with my child, I like to take her to the store. She can utilize her own debit card and kind of get that process started with interacting with either a cashier or individual who is receiving their money. You want to know what your receipt looks like and how much you're spending. So it's a good opportunity for you to engage with your child to learn about money habits. So when your child reaches adulthood, the account can seamlessly be transferred over to them in a regular savings account in their name. So that way they can actually start to save on their own. So something to think about. All right, so moving on. We have share certificates and CDs. Share certificates, also known as certificate of deposits, are accounts that allow you to deposit a specific amount of money and agree to leave it in an account for a specific amount of time. So if you have a term that's locked in for 12 months, those funds are actually allocated into that specific account for that time frame of 12 months. However, you can access the funds, but it's just very limited, and it may come with penalties depending on when you decide to access those funds. As long as you don't do it, or if you do it during the maturity route, then you'll be able to access those funds if necessary without any penalties. So always keep that in mind when you're looking for a share certificate. They do come with those penalty options as well. Our share certificates are great options for those who are looking for guaranteed savings growth. These accounts are often fixed rates, anywhere from 6 months to 5 years. So you can exactly know when your return will be. United States Senate Federal Credit Union, we offer both traditional certificates and bump up certificates, giving you a flexibility to either lock in a stable rate or take advantage of the rate increase as they go with your term. So because share certificates typically pay a higher dividend than standard savings accounts, they're ideal if you want your money to work harder for you and just kind of sit there and you don't have to think about it. Most deposits accounts and funds are insured up to $250,000. So it just depends on how much you want to put in and how much you want protected. So just keep in mind that your funds stay in that particular account full term, and early withdrawals may come with penalties. Another type of savings that we do offer is a money market savings account. The money market savings accounts are a little bit less common. I don't know if you've heard of them, but if you have, they kind of work like a checking and a savings. They have access to checks, they have access to debit cards, and they also have access to a little bit higher dividends. So while they have higher rates, they are also often more restricted to the amount deposit required. So usually you'll see that amount be a little bit more higher than your average savings account. And our tiered earnings for these structures just simply means that the more you save, the more you can potentially earn. So with that being said, if you have a monthly fees with this account or your monthly amount stays in there, it belongs, it's working towards your goal. So all United States Senate Federal Credit Union deposits accounts like money market accounts are NCUA insured up to $250,000. So you can save that money with confidence. And these particular accounts are perfect for short-term and mid-term goals. So whether you're building for an emergency fund or if you're building for a savings account for a large up-and-coming expense of some sort, you can utilize this account as well. All right, so the next account we're going to talk about is HSA savings accounts. If you have heard of this before, then you'll know that the last few types of accounts, these HSAs can be covered usually in different ways. If you're going to use this for a more specific option, if you have insurance or something like that, you can take advantage of this. If you have like a high deductible, you can utilize your HSA account. And this also has this amazing tax advantages that come with that. They are typically limited on who can open a health savings account, usually based on the type of insurance policy that you may have. There are also typically limits set to how much you're able to contribute to an HSA annually, as well as restrictions on that. So, what you can use the funds for. Usually, if it's geared towards anything related to health issues or anything, like if you're going to the doctor, you need medicine, or if you have to cover a copay or anything like that, your HSA will come in handy with those particular needs. Next up, you guys, we have something called a 529 account. These 529 savings accounts are actually for educational expenses as well. So we talked a little bit about HSAs being for medical expenses. Well, 529s are going to be used and geared towards anything dealing with education. While we do not offer, we do offer different forms of 529s, not necessarily through us, but we have some options available to you for that. 529 college savings plans are just powerful ways to save for the future and education expense. So again, while we don't directly offer those, we do partner with fellows. Most of you, if you've joined our calls, you've probably heard of Fellows Financial Group, who we are utilizing as an amazing resource for our members that allow you to have some personalized options that are available to you and planning support. These plans here with 529s, they offer several tax advantages. Your contributions can grow and be tax deferred, and withdrawals are also education expenses are tax free. So with the funds here in your 529 savings account, you can also take advantage of high contribution limits. So with 529s, if you're geared towards education expenses, this plans allow you to save more money over time compared to other education saving options. And this account owner retains full control of the funds. So if you have a child or a minor who you may want to set up a 529 for, if you are the owner of this particular account, you have full access to that even after your child reaches adulthood. So that's always something good to consider. In addition, some states may offer extra tax benefits, making these plans even more valuable. Even after members who want maybe some type of personalized support, Fellows Financial Group, who we work with very closely with our members, they can help you compare your options and give you some amazing options that are available to you to understand different plans and the features that may be beneficial to you, and help you create a strategy for your children's financial goals and for your family overall. All right, so we're going to talk about next retirement savings accounts. So this is a fun one because obviously everyone is going to need some form of retirement every once in a while. But many employers offer retirement savings accounts, and you can see different options as well. You can set up payroll deductions that go straight into your account. When you get paid, your employer can match those funds that you contribute, and typically up to a certain percentage of your salary. So a lot of those are benefits that most employers do offer. And if you don't go through your employer, you can also go through, another option for retirement solutions as well if you don't want to go through your employer. So with that being said, with the retirement solutions, you also offer individual retirement accounts. Here at United States Senate Federal Credit Union, we do know how important it is for you guys to plan for your future. With IRAs, we have a special team that's dedicated here to help you guys walk through what that looks like for you. We offer both traditional and both IRA accounts, Roth and traditional. So you have that option to kind of choose what works best for you in whatever situation you are currently in your lifespan. Some people may be leaning more towards a traditional option, whereas others may be ready for Roth options. And there's a lot of moving parts that move with both of those. So it's always best to speak to someone who's very familiar with retirement solutions so you can get a clear understanding of what works best for you. We also offer flexible setup options. So you can open up your IRA with us as a savings account or as a term certificate if you choose. And if you like a guaranteed rate of return, this could be an option available to you. Our IRAs feature competitive dividend rates, and they are higher than the standard savings accounts. So there's no setup maintenance fees with that. And again, like everything else, they are insured up to $250,000. So your money's always protected. For the year 2025, you can contribute up to $7,000. And if you're at the age of 50 or older, you can make an additional $1,000 to catch up contributions to boost your savings. So just remember, we have a dedicated team here to help support you guys if you happen to have any questions about what that is, what that looks like for you at this current age and time. All right, so moving on to saving for a specific purpose. So we talked a little bit about the different types of savings accounts. Now let's move on to talking about the different categories that, you guys might want to save for, right? Because at the end of the day, there's going to be a lot of different things that you might want to save for. So the first being an emergency savings account. I know that everyone on this call has heard of that. They always tell you need to have a savings account. You need to have an emergency savings just in case something happens. But it's really good to think about having an emergency savings account because it allows you to set money aside to help you for unexpected occurrences that may happen. Please understand that there are things that could be avoided and may not be avoided. Understanding the nature of an emergency of what is considered unexpected. So it's important to understand that you want to keep the money in your emergency fund accessible so you can get that money accessible to you or access it whenever you need it. This is going to require some, obviously strict accountability. It's going to really push yourself to not really want to access those funds, but it's easier said than done. I'm a victim. I do know. So I get it. But at the same time, you can't do it if you don't try. So always at least attempt to try to have a savings if you don't currently have one for emergencies. Obviously, how much do you need to save? You may have heard advice, saving 3 to 6 months in advance of expenses, whether that's a month or two of your mortgage payment or your rent payment. Just start out by determining how much your household needs to feel secure. If you think that $500 may be a good cushion, start with that being your goal. If you think that, $2,500 may be more realistic for you, whatever you think may be necessary for your family, put that into consideration when you're looking to work out a starting point. Speaking of, wouldn't it be great if we just had one unexpected event for the rest of our lives? I mean, that's not realistic, but things happen. You may have an accident on the side of the road. You never know what happens with a new tire. If you have funds in your savings, do you have access to fix that tire? Always ask yourself, if anything were to happen to me, what do I have as an emergency cushion for me and my family to help cover that? So that's always something to think about when you're considering savings for emergency. So we're going to switch gears a little bit here. Savings for a goal versus other options. So savings for a goal may be a little bit more fun than saving for emergencies, of course. But this is money that we put aside for future purposes and that we like to have. So this could be short term or it could be long term, right? So if you're saving for a long-term goal, and you probably don't need access to that money right away, consider putting these funds away into an account that may offer you a higher interest. You know, you may have access to those funds later on, but you not necessarily need access to it right now. Of course, if something comes up and you really need access to it, you can, but the idea here is to try to put that money away in an interest-bearing account while reducing access to it, so that way, you know, you're not so readily accessible to it to be able to take that money out. Many of us have more than just one goal that we're saving towards at once. So maybe if you're saving for vacation, and you have 6 months to do so, and you may want to do a payment for a couple of years, like a down payment for a home. You know, you have multiple things you're working towards. This is great, but you know, it could be either or. Consider keeping those funds separate by using multiple accounts or sub accounts. So you can always split those options up and split the funds so that way they're not right there in your face and you're ready to spend it right away. This will help you to ensure that you are on track for both of your goals at the same time while keeping them separated from your everyday funds. All right, and finally, we have what you know, you guys, I don't know if you've heard of this one yet, but this is called sinking funds. And sinking funds is what we refer to as putting your money away over a periodic of time. So, you know, if your expenses are there, when I say periodic expenses, you know, I mean expenses that you're paying for a few times a year or even once a year, not necessarily monthly expenses. So when those expenses come up, however, they can be challenging and account for, you know, your monthly budget, even if you know that they're coming up, you know. So sinking funds are different from emergency funds. In that case, sinking funds are funds that we actually do know they're coming up, whereas emergency funds, you know, when things happen, you don't necessarily know that they're coming, but you just need to know you have to have something there for them just in case. Sinking funds can also be created for expenses that you may not know the exact date of. You know, you may not know that they're coming at this second, but you know, hey, I'm going on a trip probably in 6 or 9 months. I don't know which one, but I know it's coming. I need to start putting the money away for it. Where emergency funds are for things that are going to come right out of the blue. And similar to like your goals, you're encouraged to have multiple sinking funds. If you have multiple periodic expenses, you want to be prepared for them, okay? So those are what sinking funds are. And if you haven't heard of that before, because I know I just learned a little bit about it, I think it's something to really look into. So we have back to school supplies for kids. So when it comes to back to school supplies, this is going to be a little game we're going to play, guys, here just to kind of go over what we discussed. Let's talk about some cool scenarios that what you would consider a specific need for. So in this case, back to school is something with the kids. You know, is this something that you all would use as an emergency fund, goal savings, or sinking fund? You know, you can drop the answer in the chat if you guys know what that answer may be. And I can't see the chat, so I don't know exactly what you guys have there. But if you answered sinking funds, that is the correct answer. Sinking funds, school supplies and new shoes and all the things that people need for back to school, you know, and they're not cheap either. They're getting pretty pricey. I'll tell you that. My daughter is going to 6th grade and we just finished school shopping, and I just don't want to tell you how upset I am about the cost of book bags now. But we know that this is something that we need to pay for. So this was a sinking fund. This is a prime example of how, you know, ahead of time you can use sinking funds. So, you know, school is coming up, you have to pay for it. It's just a matter of when and where. All right, we're going to move on to our next one. Are you guys ready? A tree falls on your roof. Is this an emergency fund, a goal savings, or a sinking fund? Please use the chat if you can. Let me know what you guys think. All right. If you answered emergency fund, you are correct. This is definitely an emergency, right? You do not expect a tree to fall on your roof. It just kind of happened, and you're like, oh my gosh, what am I going to do? Of course, you want to go through your insurance, but just in case. No one ever expects a tree to fall on their roof, but this is definitely a prime example of an emergency fund, you guys. All right, next one. Holiday gifts and annual travel for your grandparents. What do you guys think? Emergency fund, goal savings, sinking fund. Drop it in the chat. Emergency fund, goal savings, sinking fund. Which one do you guys think it is? All right, it's going to be sinking fund. That one was a little tricky, I'm pretty sure. That was going to be a sinking fund. All right, awesome. We're going to move on to the next one. A family vacation next summer. Is that going to be an emergency fund, a goal savings, or a sinking fund? Drop it in the chat, guys. All right, that one is going to be a goal savings. While this could potentially be a sinking fund, it could be for some people. Many of us normal folks would consider this a goal savings that we're saving for. We want to save for a family vacation. So we'll be leaning more towards a goal fund. All right, we're going to move on to the next one. Down payment for a new house. Emergency fund, goal savings, or sinking fund? Drop it in the chat. All right, this is going to be a goal saving. In most cases, this will be longer term goal saving. So this is going to be something that you know in maybe 3 to 5 years, I want to buy a home, or even a little sooner, I want to start to save for a down payment for a new home. All right, next one. New brakes for your car. Is this going to be an emergency fund, goal savings, or sinking fund? Please use the chat. All right, this one, it could depend. It might truly catch you off guard, and it could be an emergency. However, you may need to know that your car is getting older, so hey, I might need some new brakes soon. Or, unfortunately, something could have happened that you need new brakes for. So you just never know. But yes, this is going to be either or here. All right, car repair after an accident. Is this going to be an emergency fund, a goal savings, or sinking fund? Use the chat, you guys. All right, I hope you guys got this right. This is going to be an emergency fund. Definitely an emergency fund could come in handy. No other plans to get ahead into, no one's going to plan to have a car accident, of course. So, hopefully everyone's okay. But this is definitely an emergency fund. Annual insurance payment. What do you guys think about that? Emergency fund, goal savings, or sinking fund? Drop it in the chat. This is going to be our final example. All right, we're going with sinking fund. If you answer sinking fund, you are totally correct. I hope we got some good engagement out there, you guys. Awesome, awesome. So we're going to go ahead and move forward with our next steps here. So these here, we've talked a little bit about saving money and what to save for. Now let's wrap this up by talking about how to build a savings plan. So we're going to start with step one. You guys see here, step one is to create a realistic monthly budget. Okay, you will need to know how much money you have available to put towards your various savings accounts. We talked about all the different savings accounts that are offered to you guys. This is going to be a part of your first step. A budget is imperative in figuring out what it is that you're trying to accomplish here. So first step is you're going to list all of your reliable income, review your statements to identify all of your expenses. Then you're going to calculate to see how much you have left towards those expenses. We're going to provide you guys with a budget worksheet and align priorities workbook to walk you all through this process. So, you can look on our website for that as well. If you don't already have a budget outlined, but you can definitely do this step with us simply by just writing your things down on a sheet of paper as well. All right. Next step. We're going over to next step, guys. Determine what you would like to save for. So, would you like to start with an emergency fund? What short and long-term financial goals do you currently have? What are your expenses that you're periodically paying throughout the year? So these could be, your credit card bills or anything that, sometimes it could surprise you if you have like a random annual fee or something of that nature. Or maybe you have a little stressed out from, expenses that comes back around. You may be a little stressed out about those each time they come back around each year. So determine what you would like to save for. It also could be something as simple as a vacation. We all need one of those. So something as simple as a vacation can help you. All right, so some examples of those would be sinking funds, holidays for your birthdays, anniversaries, car maintenance, home maintenance, medical and dentist expenses, vet bills, which can be very pricey, school expenses and activities for kids, also insurance. All of these are examples, okay, of sinking funds. Next, we're going to move over to examples of of your goals, family vacations, home remodeling projects, new vehicle. If you want to purchase a new vehicle, we actually just wrapped up an amazing promotion where we were offering gap insurance for anyone who did an auto loan with us. So that gives you an amazing opportunity to save some money there as well. Down payment towards a new home or even an investment property. Or moving expenses. If you're moving, I'm sure you know that could be pretty pricey as well. This could be a simple goal that you may want to save towards. All right, so step 3. Okay, step 3, determine how much you can save each month and how you'd like to break that down. So let's look at that. So if you guys have the breakdown here on your screen, all of your annual expenses, you will basically total those up and divide them by 12. That will give you your monthly amount for each item and kind of give you an idea of how you want to break that down. So, if there's $400 available in your budget for all of this, and, that's great. If it's not, it's totally fine. You just want to go back to the drawing board, reprioritize what matters most, and revisit your budget and see if there's any wiggle room or flexibility to allow you to try it again. You might also consider opportunities to bring in more income. You may say, I maybe need to pick up a part-time job or cut back on some other things if possible to see what can help you with your goals. All right, so step number 4. Set up your account and how you'll keep track of them, right? So once you have determined all of your saving categories and how much you want to plan for each, it's time to set up an account. Consider which type of account will work best for you. We talked a lot about them earlier, different forms of savings. Perhaps there's a club savings account that you could align with for one of your sinking funds. Determine how you want to keep the money separate. Do you want to open an entirely separate account for a specific purpose, or do you want to have the ability to break it up into sub accounts? Those are also great options. Just remember to look into options that may have higher interest if you are not planning to touch those funds right away and you want them to just kind of sit for a while. All right. So we're moving on. Step 5, automate your savings deposits. Next, you're going to do that by determining whether you will make your payments automatically or pay them each period. Then set those transfers up so that they can happen as soon as you get paid. When you get your check into your account, it can just go right away versus you getting all your money and then next thing you know, your check is gone because you've spent it on Amazon. I'm not saying that's you, but if it's you, I understand. But again, this is a great way to set yourself up for success by paying yourself first, not to Amazon, but paying yourself first to help achieve a goal or two. Step number 6, watch your savings account grow. Don't be afraid to use the funds when needed. That's what your savings for. So, if you need them, obviously for whatever the goal may be, don't be afraid to use it for that specific goal. All right, and I got a cool bonus step for you guys. Let's see here. Bonus step here is going to be to use your extra money. So if you guys, let's say you get a bonus check for the holiday, you have a nice boss and the boss said, hey, here's an extra $300 for doing an amazing job this year. Hey, let's talk about using that money and putting it towards your goal. That can be something that can help you achieve those goals sooner. So even if you get tax refunds, something like that, some people get excited, spend all the money. You could be opposite of that and get excited and put your money towards your goals. So think about it from that perspective. Reach out for guidance on ways to free up your money and budget and put towards the savings. You don't have to have it all figured out alone. The cool thing is that you have an amazing credit union that has amazing resources that are available to help you guys. So always remember you are not alone in this fight. And with that being said, obviously you guys see here that we are very passionate about giving back to our community and making sure that we give back to our members. So you guys are very much welcomed and encouraged to contact our partners here at GreenPath Financial Wellness. GreenPath is a nonprofit organization that we partner with to provide you guys with resources to help lead you to a financial healthy lifestyle. So GreenPath has certified counselors that you can contact them for free and have just a financial assessment one-on-one just to see exactly where you stand. This involves taking a look into your budget. They do budgeting with you guys and collaborate on doing different action plans to kind of help you towards your ultimate goal. So as you guys can see here, you can contact GreenPath at the number below, 1-877-337-3399. Or you can go to our website. There's an amazing link there where you guys can contact GreenPath as well and set up an opportunity to speak to them about some financial needs that you may need that could benefit you as a member of the United States Senate Federal Credit Union. All right. So with that being said, I know that everyone has probably already heard of Fellows. I mentioned it a little bit earlier, but we know that everyone's financial journey is a little different, a little unique for everyone. So we partner with Fellows Financial Group to give our members access to more of a personalized advisory option. Michael Schimmel, who we work close with, allows you guys to sit with him one-on-one, whether that's via Zoom or over the phone or in person possibly, and talk to you guys a little bit about retirement solutions, investment guidance, and kind of work with you guys on some financial solutions that can help you towards your financial goals. Michael is recommended, he comes highly recommended from a lot of our members and that have used him, and I can say that even just yesterday, speaking to our Senate moms, we had a wonderful testimony about how amazing Michael was with the family. So I just want to say, if you haven't already, take the time to connect with Michael. He'll be able to help you guys towards your financial goals as well. And when it comes to wellness, again, we are all about giving out to our community and to our members. Our Best Life Learning Center is designed to give you guys the financial tools you need in every stage of your life. Whether you're focused on budgeting, savings, or planning for retirement, you'll find all these resources to help you guys along the way right on our website. The Learning Center also offers interactive tools, including quizzes and calculators and guides to help you guys better understand your finances. And a lot about what we talked about, those budgeting, all those things you can find on our website. So the best part is that you can access them anytime. They're available to you through Bonsai. You guys have the on our website, there's a usfcu.bonsai.org that's available to you guys here. You can take that and use those tools on there, and they're absolutely free for you guys. So I encourage everyone on the call to take a few moments to check that out when you get a chance. All right. And with that being said, we are just about wrapped up. I know it was a lot to take in. I tried to go as fast, but as slow as possible. So I want to say thank you guys so much for tuning in today and learning a little bit about some amazing opportunities for you guys to save. And again, take advantage of some of those amazing opportunities on our website to speak with some of our resources who can help you guys with your financial goals. So thank you for taking time to hear me out today. And thank you, team.
Awesome.
And I'll hand it over to Milton.
Thank you, Ernika. That was a great presentation. And again, hopefully, if you attended this, you were able to take something away. I mean, there's definitely a lot of options out there. And like Janika stated, everything. It's about having a plan in place, knowing your why, and once you establish that, it truly having the savings for whatever purposes, it can truly make a difference for you down the road. And most important, it's going to give you the peace of mind that everyone needs, right, and deserves. So again, thank you, Jarnika. I know there was a lot of interaction, a lot of questions that were coming through, and I believe one of the comments that I saw early was in reference to the NCUA, and I did want to make a clarification when it came to the NCUA coverages. So the NCUA, just like the FDIC, for those that are probably more familiar with the term, just because they're the one insurance banks, it is $250,000 per owner. It doesn't matter the account. So it is $250,000 per owner. So that means that if an owner has multiple accounts in a financial institutions, all of those accounts will be covered under the umbrella. There are ways on how you can stretch that. Actually, one of them, and the most popular, it's by simply adding a joint owner or beneficiaries. So that is one of the things that I wanted to emphasize when it comes to the NCUA insurance. Again, so it's $250 per owner per financial institutions. And with that being said, Eli and Andrea, I know you were busy, so I'm gonna hand it right over to you.
Thank you so much, Milton, and thank you so much, Jarnika, for doing such a great job presenting tonight. So our first question is how many savings accounts are you allowed to have at USFCU?
That's an excellent question. And Jade, since you presented, I'm going to let you jump in, but I can take this one if you like. And to answer the question, Andrea, it is no limits. You can have as many savings accounts as you want. We will not restrict you. If you want to have one account, it's fine. If you want to have 2, 3, 10, I mean, you name it. You can have as many savings accounts as you wish. There's no restrictions as to the number of accounts that you can have with us here at the United States Senate Federal Credit Union. So that was an excellent question, though. Loved it. Thank you.
Great question.
And alongside that, what are the sub accounts?
Yeah, so the sub accounts can be essentially if you have like a checking, savings, your holiday account could be a sub account. If you have what you consider like a Christmas account or a vacation account, it's just an additional barrier account that you use for a specific thing. So, again, I personally love the holiday savings account options because the Christmas time is my favorite time of the year outside of my birthday. And of course, I have to make sure I have my decor and all the cool things that I need for the holidays. So that's just my 2 cents.
Yeah.
And,
And if I don't, oh, sorry, Milton.
no, go ahead,
I was
Eli.
just, I was just going to add on, in a credit union, you would hear a sub account be referred to as a share. So a sub account you would hear more in a banking institution versus a credit union you would hear as a share. So just a slight difference in the nomenclature.
Yeah, and I'm glad you mentioned that, Eli, just because a lot of times members can get confused just because of the terms that you might be more familiar with. And I know I'm pretty, Jonica was talking about share certificates, and you're like, what is that? And in essence, it's the same thing as a CD account. It's just that on the credit union side, we have different names for certain accounts or terms, if you will. But going back to the original question, a sub account again, it's just I love to use the sports um this the sports everything I related to sports for some reason, and having a sub is that, right? It's your backup to your main player. So if you have a savings account and you want to have a backup to your savings accounts, then you will go ahead and establish an additional account. And like Janika was saying, if you have a savings account and you're using that savings accounts for emergency funds, that's great. But what if you want to have an emergency to your emergency, or if you want to, I mean, again, you can add nicknames to these accounts, and so that way you know the difference between what purposes they're going to play for you in your life. So, but again, another great question. So. I told Jornika that you got this question, so I'm gonna stop right now. So Jornika, you got it from here.
Perfect. And we had a question about retirement accounts. So are the retirement savings accounts offered, for example, through USSFCU different than the TSP or thrift savings plan offered by the Senate?
So I'm gonna say yes. So the TSPs that are usually offered through the Senate are usually very similar but separate, just kind of verbiage wise. But with us, we have our IRA team who are awesome that can help answer any questions if you have a retirement plan. With us, if it's with the Senate, we usually have Michael Schimmel, who's with Fellows, who's very well versed in those particular savings accounts. And you can on retirement accounts, I'm sorry. But you can definitely set up a one-on-one consultation with him, and he'll be able to help you kind of distinguish what the differences are and help you get some information on those TSP's accounts. Yeah, absolutely.
And yes, and to add a little more to Jonika's answer, yes. So a TSP, it's in essence it's the equivalent of a 401k. If you're in the private sector, I know in the government, if you're in the government, TSP, it's your retirement account. But it is definitely different. It's separate. And again, the way how we see it in our world, in our side of things, it's that's a 401k. But again, IRAs and all of those type of accounts are treated differently than your normal TSP. And again, TSP it's just kind of like connected to the reference that I used in my previous question as to how different institutions have different names for certain things. TSP is the same thing, the same. Think of it as an example that I gave between CDs and share certificates. It's the same type of product. It's just that it has a different name.
Thank you so much, guys, for answering that question. And our next question is, what's the benefit of a money market versus CD/shared certificates?
Yeah, so the money market savings accounts are essentially just more accessible. The money market savings allows you to have a debit card or checks to access those funds, whereas a CD or a share is actually locked in for a certain time. So if you want to access your funds that way, you're going to be penalized essentially if you access it before your maturity date. So it really just depends on when you open one of the options, how you want to utilize it and how I guess soon you want access to those funds. I would suggest if you want to have those funds locked up for a certain time frame, such as a year or so further out, and you want to earn a little bit more interest on those funds, again, you're going to probably look towards a CD if you know those are funds that you don't want to have direct access to. Whereas a money market, you're going to have direct access to that. It will kind of be almost like a sub account because you'll have your savings and then you'll also have your money market savings where you can transfer between those accounts as well. It just has to have a balance requirement usually with the money market savings that's a little bit more higher than your standard savings account.
Okay, thank you. And we have another question. That's will we be sharing the slides via email, etc.? And the answer to that is yes. Carrie usually does it the next day. So yeah, you'll get the slides and the recording usually is up by the end of the week, give or take. Yeah. Okay.
And it looks like we had another question and follow up to like the savings and money markets. Someone said that I heard you could only make 6 convenient withdrawals or transfers from savings accounts a month. Is that still true?
Yes.
No, actually, during
Oh.
COVID, they revoked that. So it's dependent on the institution. And so USSFCU no longer has that 6 monthly requirement.
Yeah, I was going
Yeah,
to say
no.
that was actually attached to your statement, regardless of how often you will get your statement. And I know in my previous life in another credit union, savings accounts will only get statements every 3 months. So having that limit really played a big role into the limits that the government has in place for those type of accounts. But like as Eli mentioned, ever since COVID, those restrictions were lifted, and a lot of different financial institutions have now, gotten more lenient when it comes to the withdrawals on your savings accounts. But again, every institution is different. We encourage you to check with your in case if you don't have your savings accounts here at the Senate, then you want to definitely reach out to your financial institution just to check and see if it's the same as it is here, where we actually don't follow those requirements anymore. And that's not to say that it could come back at any time. I know that was part of one of the regulations that was implemented from the government, and so it was lifted during the COVID, and it hasn't been placed back yet. So some institutions are following that, others are putting the restriction back in. So our advice is to always check with your financial institution to make sure that that is the case, and you don't get penalized for doing more than the limit, which is 6 withdrawals per statement cycle. So again, it is important to know the difference between every month or statement cycles. And if you happen to be happen to be in a financial institution where they only issue statements every quarter, then that also is good to keep in mind.
Perfect.
Our,
And it looks like, oh, sorry, Andrea.
our next question is the services advisor free?
Um, the fellow service advisors.
Yes.
Yeah, so your consultation is free, and there's no limits to that. You guys can set up a one-on-one consultation with Michael, and he'll be able to help you with that. He's fiduciary, so that way he only makes money based off of your earnings from your investments. So, if you don't make money, he doesn't make money. So I only can assume that he wants you to make money. So you guys have a free consultation with him. anytime. And I do encourage you guys to take advantage of that.
And I think those are all the questions. I might be wrong. Eli, do you see any more?
No, I think we covered all of our questions right in time.
Perfect.
Awesome.
So look at
Well,
that, right on time. And I was gonna say that again. I just want to thank everyone for coming in and being part of this webinar. But before we let everyone go, we want to definitely remind you of the webinar that we have coming up next week. And that is actually, it's going to be one that is very relevant, one that is actually impacting everyone nowadays. I know I am. And it's going to be fraud in the age of AI. So fraud in the age of artificial intelligence, the deep fakes, voice cloning, and scam innovations, and everything that it's happening. You don't want to miss that. The webinar next week again is going to be at 6 p.m. And please help us spread the word. And like Andrea stated early, this webinar will be shared. We're gonna send a copy of everyone. I know there was a couple of questions about if we're gonna send a copy of the slides, and that answer is yes. And most important, that recording of this would also be uploaded into our website later in the week or early next week. But again, Jonika, amazing job as always. Eli and Andrea, you guys are the best. Appreciate everything you all do. And we hope to see everyone back again next week. So everyone have a wonderful evening.